is this the start of the first EV price war with Tesla going first? I think there's mixed opinion on this, right? We write that this is Ford responding directly to Tesla, from a demand perspective.
OpenAI, the research and development team behind viral bots like ChatGPT and DALL-E 2, could see a valuation of up to $29 billion.
A lot is going on with Tesla now, from the price cut to the last quarter report, which surprisingly showed Tesla is still doing well. There's also the case of Elon's lawsuit, but that's beside the matter. It seems we could be seeing a lot of action in Tesla stocks this year. There's also the case of AI startups that are disrupting a lot of big tech businesses this year. Cathie Wood talks about all this and more. Stay tuned to get all the details, but before you proceed, why not click that subscribe button? It's always appreciated.
When we look at deflation, there's good deflation and there's bad deflation. The bad deflation is caused by demand destruction. The good deflation creates demand, and that is what our research is centered on, which is technologically enabled innovation that rides down learning curves, which are expressed by cost declines, which turn into price declines. You'll notice that Tesla is cutting prices, and many people jump to the conclusion that, they're having so much trouble now, there's so much more competition. No, Tesla can cut prices now that supply chain issues are passing us, because it is riding down a cost curve. The battery cost curve declines. And I think its battery costs are lower than anyone else's. Its drivetrain costs, is more correctly said, are lower than anyone's out there.
Right.
And so he wants to proliferate electric vehicles to save us from environmental disaster. That is his mission. And he is going to drive down prices. When you drive down prices, units explode. It's no surprise to us, even without price cuts last year, that electric vehicle demand was up more than 60%, while gas-powered demand was down, I believe, 7%. Yep. The consumer preference shift has occurred. We are now in prime time for electric vehicles.
2022 was a hard year for Tesla, with its market value falling more than two-thirds from over $1.2 trillion in November of 2021 to less than $400 billion last year. This year, the American automaker has changed its strategy and is attracting customers with price cuts. Tesla recently dropped the prices of its Model 3 and Model Y vehicles in the U.S. by up to $13,000. The company explained the move as, quote-unquote, a partial normalization of cost inflation. Though there is reason to think this is just a marketing strategy, it is actually true that supply bottlenecks are being cleared. Tesla's price cut is being felt in the whole EV industry. Other automobile companies are also cutting prices. Tesla faces competition from new electric-only rivals such as Lucid, Fisker, and Polestar, as well as electric cars from long-established brands such as Volkswagen, General Motors, and Hyundai. We are seeing evidence that manufacturers are able to produce at lower prices now. This could be a signal that inflation could really drop even steeper than we are anticipating. Wholesale goods and services prices fell sharply in December, signaling that inflation is starting to ease. The Producer Price Index, or PPI, declined 0.5% in December, surpassing expectations, driven by a drop in energy and food prices. Future inflation readings could be uncertain as gas and crude oil prices have risen recently. The current decline in PPI is the lowest since 2020. Is the government taking note of these indicators? And should we expect policies that would reflect the deflationary trend? Cathie answers this next.
I think what has happened here, there are three people who have weighed in the last week who really have changed their points of view. One is Larry Summers. Larry Summers was almost apoplectic last year. So this is the former Treasury Secretary.
Right.
Almost apoplectic about inflation. And I think he truly influenced the Fed because he was so sure that we were in a 70s style inflation. If you'll notice in the last week, he said, okay, now don't signal what you're going to do in the future. We're seeing some economic weakness here. And I think the other thing he was saying, not explicitly, was, hey, some prices are coming down that I didn't expect to come down. You know, the oil price is roughly half of where it was last March. So that's the first person. The second person was Treasury Secretary Janet Yellen. And remember, I think the market last year got really upset when she changed her mind on transitory. And I think that fed Chairman Powell as well, and turned him into an even more hawkish mode, along with the rest of the board members. She this week said that now that inflation is coming down, we're probably going to be looking at the bigger risk being kind of mired in low inflation, low growth. Mm-hmm. That was a big change. And it effectively says, wow, maybe it was transitory after all. It was just a little longer than we expected. Who knew supply chain problems would last 2 to 3 years? Who knew Russia would invade Ukraine? And then the third thing that happened, this was really important, I think, in the Q&A, Chairman Powell himself said, I agree with Lyle Brainerd. We do not believe we're in the middle of a wage price spiral. And that's another code phrase for the 70s style inflation. So I think that is what the market's responding to.
Former Treasury Secretary Larry Summers warns of a possible recession. Despite inflation slowing down, he believes it is still inconceivably high. He previously stated that a 5% unemployment rate for 5 years or 10% for 1 year is necessary to control inflation. However, the current unemployment rate is far less than that at 3.5%. Despite his previous warning, new data suggests that his prediction of a long-term recession has not been accurate. U.S. Treasury Secretary Janet Yellen does not agree with him. She admitted she was wrong in her previous prediction about inflation, as it continues to be a political liability for the Biden administration. This is a serious signal that there could be an unexpected pivot this year, as Cathie Wood anticipates. Another game changer is most likely going to be AI. We are already seeing the impact that startups like OpenAI are having. So what can we expect next?
These are the companies that have enjoyed incredible success. They have created big markets. And to move up tenfold, 100-fold from here is going to be difficult. We're not saying they're not going to be successful, but we are saying a few things. Take Amazon. Amazon is not a social network. We have moved into a world of social commerce. So we own Shopify. Shopify is supporting Instagram and TikTok and others that have that are taking really social commerce and scaling it. And Amazon will not become a social network. It is not one. It's a good online retailer, and I would put it in a more mature category of online retail. That's not what we do. If you look at Google or Alphabet, everyone's talking about ChatGPT, and we do believe that it is going to put search at risk. Search is 95% of Google's revenues. Now, we also believe, however, that Google is going to harness AI as well. I mean, it owns DeepMind. It is one of the best AI companies in the world. But I think it has been so caught up in fears about legal liability. We are in the very early days of what will become very immersive digital experiences. In fact, we believe that more than half of our spending will end up online as opposed to through physical stores. And that's part of our big ideas this year. Our team, led by Frank Downing and Nick Bruce, have done a terrific job, Andrew, as well, pulling together how this new world is going to work. So absolutely we do. I think what happened with Meta last night, I listened to the call, was fascinating. I think what's happening is Meta has an answer to TikTok. It's Reels, and Reels is taking off. They're also extremely focused on using artificial intelligence as they are activating this platform. And WhatsApp is also becoming a very important platform that they have not monetized.
The rise of AI cannot be eliminated from the current wave of layoffs in the tech industry. These companies are becoming more efficient in their use of this technology, and we may see bigger shakeups in the tech industry. Do you think AI startups would take over from some of the biggest tech companies? Let's have your take in the comments. Remember to give this video a big thumbs up and check out our other uploads. Adios, and thanks for watching.